Inflation is a persistent economic phenomenon that affects the purchasing power of your money, making it progressively harder to maintain your desired financial lifestyle. While it might seem like an insurmountable challenge, there are concrete steps you can take to not only protect your financial well-being but also ensure that it continues to flourish despite the pressures of inflation. In this video, we will delve into various strategies and techniques that will empower you to shield your financial lifestyle from the eroding effects of inflation. Let's get started the video. How to keep your financial lifestyle despite inflation. Understanding inflation and its impact. Inflation, in its simplest form, refers to the steady increase in the prices of goods and services over time. It is typically expressed as an annual percentage, representing the rate at which prices are rising. Understanding inflation is fundamental because it sets the stage for the actions you need to take. Inflation is measured using various indices, such as the Consumer Price Index, CPI, and the Producer Price Index, PPI. These indices track the changes in the prices of a basket of goods and services commonly purchased by consumers and businesses. Building a strong financial foundation. To navigate the challenging waters of inflation, it's crucial to build a strong financial foundation. This involves several key components. Create a comprehensive budget. Start by creating a detailed budget that outlines your income and expenses. This will help you understand where your money is going and identify areas where you can cut back or reallocate funds to better combat inflation. Emergency fund. Establishing an emergency fund is paramount. This financial safety net should cover 3 to 6 months' worth of living expenses. It provides you with a cushion to weather unexpected financial storms without derailing your long-term financial plans. Debt management. Assess and manage your debts effectively. High-interest debts can significantly erode your financial stability. Prioritize paying off high-interest loans while maintaining lower-interest debts that can potentially work to your advantage in an inflationary environment. Diversifying your investment portfolio. Investing wisely is a cornerstone of safeguarding your financial lifestyle against inflation. Diversification is a key concept here. Instead of putting all your eggs in one basket, allocate your investments across various asset classes. Stocks. Equities offer the potential for substantial long-term growth. Historically, stocks have outperformed other asset classes, making them an effective hedge against inflation. Bonds. Bonds can provide stability and regular income. Consider investing in inflation-protected bonds like Treasury inflation-protected securities. Adjust with inflation, ensuring your purchasing power remains intact. Real estate. Real estate can appreciate over time and generate rental income. It's a tangible asset that can serve as a hedge against inflation. Investing in inflation-protected assets. In addition to diversification, it's wise to allocate a portion of your portfolio to assets explicitly designed to protect against inflation. Treasury inflation-protected securities. These U.S. government bonds are indexed to inflation and guarantee a real rate of return. They are considered one of the safest investments during inflationary periods. Precious metals. Gold and silver have a long history of retaining their value during times of inflation. They can act as a store of value in your investment portfolio. Real assets. Invest in physical assets like real estate and infrastructure projects, as they tend to appreciate inflation. Owning real assets can provide a buffer against rising prices. Generating passive income streams. Passive income sources can serve as a powerful tool for combating the eroding effects of inflation. Dividend stocks. Invest in dividend-paying stocks that provide a regular stream of income. These stocks often increase their dividends over time, helping your income keep pace with inflation. Rental properties. Owning rental properties can generate a consistent stream of rental income. Rental rates often rise with inflation, providing a natural hedge. Navigating the housing market. Housing costs typically constitute a significant portion of an individual's expenses. To effectively manage these costs in an inflationary environment, renting versus buying. Evaluate whether it makes more sense to rent or buy a home in your current financial situation. Sometimes, renting can be a more cost-effective option. especially in rapidly appreciating real estate markets. Refinancing. Keep an eye on mortgage rates, and consider refinancing your mortgage to secure a lower interest rate. This can reduce your monthly housing expenses and free up funds for other investments or expenses. Budget for maintenance. Homeownership comes with ongoing maintenance costs. Budget for repairs and renovations to ensure your home retains its value and appreciates over time. Managing your debt wisely. Debt can either work for or against you when inflation is in play. It's essential to distinguish between good and bad debt. High-interest debt. Prioritize paying off high-interest debts, such as credit card balances, personal loans, and payday loans. The interest on these debts can quickly erode your purchasing power. Low-interest debt. On the other hand, low-interest debts like mortgages and student loans can be strategically used to your advantage. These debts typically have fixed interest rates, meaning the real cost decreases as inflation rises. Inflation-adjusted budgeting and financial planning. To ensure your financial lifestyle remains robust in the face of inflation, adapt your budget and long-term financial plan. Inflation-adjusted budget. Periodically update your budget to account for rising prices. Identify areas where your expenses are increasing due to inflation and adjust your budget accordingly. Long-term planning. Reevaluate your long-term financial goals and make necessary adjustments to account for the impact of inflation. This may include revising your retirement savings targets or adjusting your investment strategy. Monitoring and adjusting your financial strategy. The financial landscape is dynamic, and your strategies must evolve accordingly. Regularly monitoring and adjusting your financial plan is critical. Stay informed. Keep yourself informed about economic trends and inflation forecasts. This knowledge will help you make informed decisions about your investments and financial strategies. Regular reviews. Schedule regular reviews of your financial plan, investments, and budget. Make adjustments as needed to ensure your financial goals remain achievable in changing economic conditions. Seeking professional advice. Navigating the complexities of inflation and financial planning can be challenging. Seeking advice from financial professionals, such as certified financial planners or investment advisors, can provide you with valuable insights and personalized strategies tailored to your specific financial situation and goals. Inflation is an enduring economic force that can erode the value of your money over time. However, armed with a comprehensive understanding of inflation and a well-thought-out financial strategy, you can not only shield your financial lifestyle, but also thrive in the face of rising prices. By building a strong financial foundation, diversifying your investments, generating passive income, managing housing and debt wisely, adapting your budget and financial plan for inflation, and seeking professional advice, you can confidently navigate the challenges posed by inflation and ensure that your financial future remains secure and prosperous. For more videos, like and subscribe to our channel. Thanks for watching the video.